Gershon?
Yes.
Yeah, I think you can start now. It's 4 o'clock.
All righty. Hello, everyone. First, I want to say thank you to Robert and the team at the Jewish Entrepreneur for hosting this. Happy to be here speaking with you all. We're going to talk about a few things today, and then we'll have some time for questions and comments. I will try to keep my eye on the group chat, but either way, at the end, we'll leave some time for that. All right, so the two topics that we're going to talk about today are cash flow and the loans and grants that are out there. And for the loans and grants, we're going to focus on federal. Okay, so as a drop of background, my name is Gershon Morgulis. I have a small agency. We provide part-time CFO services. So we work with businesses that have the need for additional insight, need something that they're not getting right now, but don't need a full-time CFO. Either they don't want to pay for that, or they realize that full-time CFO is not someone who they'll keep busy with CFO work. Anyway, so that's what we work on. We work on corporate finance and strategy with mid-sized businesses. And so cash flow is probably a little bit closer to our day-to-day type work. But anyway, that's where we'll start. So we're in this coronavirus situation. The first time I heard about it, it was really an issue with China, right? People had trouble getting supply from China. There was a supply shock. First time I heard about it in a serious way was when Apple said they were going to have lower earnings because they couldn't get stuff, couldn't get iPhones. And what it's turning out to be, at least from what I'm observing at this point in time, it's looking like we sort of moved more of a demand problem. Most businesses that are shut down or are having trouble are shut down either because people can't come, either the business is not allowed to be open, or technically maybe they're allowed to be open, but people can't come. So it's turning into more of a supply problem. It's turning into more of a demand problem, rather. Though, as time goes on, because of China, basically, and the fact, really, that the whole world is shut down to some degree, we potentially, as time goes on, will continue to have supply problems. Anyway, that's just a drop of background and intro into what we have going on. But now you have a business and you have a problem, right? You have some sort of cash flow issue, whether it's that you don't have the goods to sell, or you don't have people to sell it to, or you have fewer goods to sell, or fewer people looking to buy. We have a problem. So what do you do when you don't have cash? So we're going to start off with a few ideas along those lines. First thing is a little bit more of a personal finance idea, but it's something to think about. Home equity line of credit. If you have something like that set up, or you can get something like that, that is something which can help tide you over. It's not good policy in general, but it's something to consider. If it's there, if it's available, it's something to consider. If you have a home to borrow against and you're able to borrow money, might save you from doing other less responsible or less ideal things. That's just a personal finance kind of thing. But anyway, on to business. If you have a problem, and I'm hearing attorneys talk about this a lot, the best thing you can do is work it out with your landlord, right? No, well, if it's rent, but really with whomever. Nobody wants tenants or clients or people who don't pay them money. Nobody wants you to not pay money, but losing a client when clients can't pay isn't necessarily good either. The best thing to do is we'll start with banks, but it'll be clients also. It'll be vendors also. The best thing to do is to talk to your bank, right? See what your bank can do. See if you have lines available, if your bank will lend you money. Sometimes they will. The only way to know is if you speak to them. Something I had not been talking about enough over the years is how important it is to have a banker who knows your name. If you have a banker who knows your name, you're that much more likely to be paid attention to. And I'm seriously thinking of moving my relationship away from Chase for that reason. Because Chase is a big bank that can do lots of big things, but having a relationship with someone running a small business is not something I would expect necessarily from Chase. Certainly not something I was able to get, even though I tried. In your business, something to think about, something to pay attention to, something important is billing clients on time. Right? It might seem obvious, but sometimes you don't get around to it for a few days or a few weeks. When things are tight, making sure like no one's going to be mad that they got billed on time. That's a simple way. Some clients won't pay the bill until it shows up in their inbox or mail or whatever the case may be. Make sure it gets there as soon as possible. All right. Next, get a business credit card. But using a credit card to finance your business can get very expensive, right? Rates can be 15, 20, 30%, maybe even higher. But having a credit card to help with cash flow is a good idea. If you spend money on a credit card and you don't have to spend extra money to put this purchase on a credit card, you can pay that off. You have time to pay it off. You might be able to pay it off in 20 days, which means that over the next 20 days, you'll have a little bit more liquidity and be able to make decisions. Buy something you can't afford is never a good idea, including now. But buying something that you could afford and paying for other things first, credit card can help with that. If you have suppliers that you owe money to and you're having trouble paying, don't just not pay. Speak to them. Speak to them. Explain what's going on. Work out a plan. Right? They want to keep you. You want to keep them. Figure out how to make it work. If you have equipment, consider, or even not just equipment, if you're paying for anything really over 6 months or a year or many years, consider spreading out your payments. So if you have equipment, consider leasing instead of buying, right? If you need a new car, you need a new machine, a new coffee grinder, even a computer. If one computer might be small, but if you have to redo parts of your IT infrastructure, if things are broken, consider leasing instead of buying. Consider spreading out payments. Try to figure out what you can delay. So what I'm thinking of here on the personal level, there's taxes, right? You can wait until July 15th to pay your taxes. I'm not saying to wait to file now, know what you owe. But if you can hold on to your money for 3 more months, you have that much more flexibility. We also have something that sort of falls into the other half of the presentation, but there is the ability to get a payroll tax deferral. To not pay under certain circumstances, you're eligible to not pay your payroll taxes for a certain amount of time, and to delay that, Social Security taxes. So if you have the option to do that, and that frees up the equivalent of 5-6% of your payroll, so it might seem small, but $100,000, that's $8,000 that you get to hold on to for longer, right? And it's $100,000 every payroll. That adds up. That could be one more payroll. Something else on the spreading payments out is something that I'm thinking of, but there's probably many things like this, is insurance, right? Many people pay for their car insurance and other types of insurance once a year or every 6 months. Consider paying for that monthly. If you're working with clients or customers, get deposits, right? You don't necessarily have to always lay out the money. Figure out how to get some amount of money up front. Maybe get out enough money up front to cover your costs so you don't lose if something happens to your client, right? If cash flow is tight now, imagine what it's going to be like when the client doesn't pay. If you're billing clients after the fact, meaning if you didn't listen to the last idea, you're billing clients after the fact, consider billing weekly instead of monthly. You get paid every week. Again, that's less money out on the street, so that's less risk, and you get your money sooner. So now you have it, so you can use it. On the flip side, if you're paying and you prepay for things, consider prepaying for a week of goods or services or whatever the case may be, rather than prepaying for a month, right? No annual subscriptions. It might cost you a couple bucks more, but the question is it worth parting with all that money right now? Sometimes it is, sometimes it's not. Depends on the situation, but it's something to think about. An idea that I heard someone mention in this kind of context was to invoice on weekends. The argument was it makes you seem more serious and you're more likely to get paid. It's an interesting point. I haven't tried it out, but probably depends which clients you try this on. Next, figure out how to make things seamless, right? If you're not sure if a client's going to end up paying, offer them a discount for paying quickly, offer them a discount for paying electronically, figure out if you can bill their credit card, right? Instead of them sending you a check, give them a 5% discount maybe and get paid right now, because when they tell you the check's in the mail, check's not always in the mail. Sometimes the check is not in the mail. Next, inventory. Right? We have money coming in, we have money going out. Inventory is just stuff that we have in our warehouse. If it's a store, manufacturer, whoever you are, if you're sitting on inventory is dead weight. And inventory has the potential to be very expensive. My company, we're putting on a webinar next week with an inventory specialist who's going to talk about optimizing and right-sizing your inventory. So if you're interested in that, feel free to reach out to us and we'll send you more information about that webinar. It's next Wednesday morning. I'm going to put the email address in the chat for from my associate, whose name is Isabella. Okay. So inventory, consider reducing your inventory. That's definitely something to think about. And if you have dead inventory, and I had a company I was working with a while back, or speaking with a while back. We've done some work with them, and they have inventory. Some of the stuff that they've been sitting on for 30 years. I don't know how much they're going to make, but they have had cash and warehouse space tied up in stuff that's literally been there for 30 years. It's from a factory. They bought used parts from a factory that shut down in the 80s or something. Like that is very expensive inventory. Not all their inventory is that expensive, but if they had junked that stuff 20 years ago after realizing that they had sat on it for over 10, they could have done something with that money. So anyway, yeah, inventory is very important. Sometimes getting rid of your inventory is important, but figuring out what type of inventory you want to be holding. So yeah, like I said, we have that webinar. Could be interesting. Next, cash flow projections. Having a cash flow projection. Understand what your risk is. Understand where you're going to be having problems. If you anticipate the problems, you can go and do all these things ahead of time. If you realize you can't make payroll, you figure out what to do. And maybe that means taking out loans. Maybe that means laying off people. Maybe that means paying vendors later. But you don't want to find that out while you're running payroll. Anyway. Okay, so we're going to now move on to a few other cash flow ideas, these are things that are a little bit closer to what I'll call general business, sort of P&L. Are you making money or not, as opposed to moving things around, which is what we were talking about until now. So making money or not. Figuring out what your break even is. How much business do you have to do to make it worthwhile to stay in existence? How much business do you have to do to justify your staff? How much business do you have to do to justify keeping your rents on? Paying rent. You might have multiple locations. You may not be able to pay, but if you understand that, you're in a much better position to go and whether it's cut or renegotiate or whatever it is that you need to do. Next, if you are paying interest on loans, figure out a strategy to make that the most efficient. One obvious strategy, and probably the main strategy, is paying off the highest interest first, though not necessarily the only one, but paying off the highest interest first will have you paying the least money over the long term. Negotiate with your landlords or vendors. See if you can reduce your costs, right? It's not just about paying later. Sometimes it's about paying less. If you're good, and I was on a call this morning with an attorney who said that he had a client that was, I believe they were in the mall, but whatever it was, they had been a good client for 20 years to their landlord. So this attorney is talking about his client speaking to the client's landlord. They had been there for 20 years. They always paid rent on time, and now they're having trouble. So instead of just not paying rent or whatever, they went and they spoke to their landlord, and the landlord knows that this is a good tenant. This is a good tenant. They want to keep the tenant, and the tenant's having trouble. So they worked something out. The landlord wants to work something out. No landlord wants to get rid of a tenant and then have empty space. So if they can figure out how to make it work for everyone, that's better than just having empty space. If you're a bad tenant, then you have other problems, and your landlord may not be interested in working with you. When all else fails, sometimes you have to threaten bankruptcy. I've been involved, not as an attorney, but with businesses that have had to go that route. And it's sad, but sometimes it is necessary. Then there's products. Sell product, there's higher value products, there's lower value products, higher margin, optimize, figure out, maybe sell other things, add-ons. Sometimes there's things you can do to play around with margins and make some more money. Source cheaper products. Maybe you can sell the same thing, but use it as an impetus to find ways to get things cheaper, to raise your pricing. I'm in the middle of, just finished a very interesting book by William Poundstone about pricing. It's called Priceless, the myth of fair value. A lot of pricing is arbitrary, and sometimes you can work out ways to have your pricing be a little bit different and generate more money that way. Now, within pricing, it's not just about raising your prices. There's different ways to charge, and sometimes you can charge more, but the client will be happier because maybe the client knows how much they can afford, and maybe there's less risk in a different type of pricing structure, and the client might pay a little more to avoid risk. See if you can sell your clients or customers more. Maybe you're selling them in bulk. Right? If you have too much inventory, a bulk discount gets you your cash quicker, and now you have the cash to potentially invest in other things. If you're selling clients things that they wouldn't be buying otherwise, even if you are giving it a little cheaper, you might end up making more money, even if your total margins are lower. And then one other thing is to think about, if you are laying people off or getting rid of fixed costs, think about the impact on the business over the long term. What is going to happen? Who will it be easier to retrain later? What will be harder to set up later? What are you doing to your business with the changes you're making today? All right, let me take a quick look and see if there's any questions. All right, we have one question that one person asked: what bank are we thinking of switching to? So you can email us. Two banks that come to mind right now are, I believe it's Customers and BNB, Dime. There's a bunch of banks, and I'm happy, send us an email. I'm happy to make intros to some of the bankers that I've been in contact with who seem like very good bankers, or nice, pay attention to people, etc. All right, next, let's start talking about some of what Donald Trump has been kind enough to work with Congress and the Senate and all those people and get for us. So you're in a situation where you have a cash shortage. You may be losing money, or you may be making money but just have no cash. And that's a whole separate conversation, some of which ties into cash flow that we discussed earlier. What do? Normally you go to your bank and you borrow money, or you change things in your business. Right now, there's some other options. We're going to start with what's called the Economic Injury Disaster Loan, EIDL. It's a loan from the SBA, which is the Small Business Administration of the United States. It's a pretty flexible loan. It can be used for almost anything. It's up to $2 million, no personal guarantee if it's less than $200,000, no collateral if it's less than $25,000. You basically apply on their website, you see what they offer you, and then you decide if you want to accept it or not. It's payable potentially over 30 years, though I think that that's part of the terms when they get back to you, the exact details of that. It's 3.75%, so that's, you know, pretty good rate for a loan. And what else? A lot of people were encouraging everyone to apply for this. Not everyone will end up being eligible. You really need to show that, from what I understand, you have to show that there is a problem with your business and that you've been impacted by the recent economic disaster, which in this case is the coronavirus situation. What I've heard people involved in this space recommending, more involved than I am, recommending, is that you set everything up, get ready to apply if you think you'll need it. Sometimes maybe you don't have any noticeable cash flow problem now, but you will. So suppose that you service a company which services restaurants. Restaurants are slowing down, maybe they're still paying their bills, and your client is still, let's say you're an accountant, and you service like a styrofoam cup company, right? And so the styrofoam cup company is going to slow down because the restaurants and the coffee shops aren't open. And you, the attorney, will end up being hurt in June because people, you know, your styrofoam cup companies and other restaurant vendors aren't doing whatever it was that they, you know, whatever projects they usually do in the summer, they're not doing. So you may not have been hurt yet. It could trickle down eventually. And so this is something which you really have to demonstrate a loss or an impact. There's the potential for to get a portion of this as a forgivable advance. If you apply, they give you the option to request up to $10,000 to be forgivable. And the way they've given out the up to $10,000 has been $1,000 per employee for a maximum of $10,000. And that is forgivable. But the rest of the loan is a regular loan, again, up to $2 million, payable over up to 30 years. Something else to keep in mind, if you do have outstanding 7A or 504 loans, which are traditional bank loans that are backed by the SBA. So if you have loans that you borrowed money from your bank in the past, but it was backed by the SBA will pay principal and interest on those loans for up to 6 months. So that is something which you have the potential to, I'm not positive if you have to request that or not, but at this point you should know. So if you do have those SBA loans, you definitely have that option. It was written into the CARES Act. I don't think that you should have to do anything, because I believe what they said in the 800-page bill was that everyone is assumed to be impacted in some way and therefore everyone is eligible, but it could be you still have to request it. And again, that's the government, the SBA, paying for 6 months of principal and interest. All right, now the big one that everyone's talking about, payroll protection plan. Payroll protection plan is started off pretty straightforward in what it was trying to do, and the waters have gotten a little muddy as some larger corporations like Shake Shack and Ruth's Chris Steakhouse and some other more famous companies got pieces of this, and it was supposed to be for small business, and everyone's all agitated. But basically the goal is you're supposed to keep people on payroll, right? They don't want to have a domino effect where some businesses lose money and then they don't pay their employees, or they lay them off, and then everyone goes on unemployment. Businesses fall apart, the people aren't getting paid, and then people who don't have money will go and spend less money, right? Because they're trying to conserve, and it's just a ripple effect, and it's really bad. So the idea was, give people some money. If you're having trouble, you get money, you keep your people on. Pretty simple process. Well, pretty simple qualification process. You have to have payroll for people who live in the United States. And you have to assert a bunch of things. So in the beginning, it was very straightforward. You basically say that because you're taking out the loan or the loan is necessary because of the economic uncertainty of the time, which to me, the way I interpret that, and I'm not an attorney, but the way I interpret that is that you don't know what's going on and there are risks here, and having this loan will be helpful. Now, having the loan might be helpful just in case. Having the loan might be helpful because otherwise you're going to lay off your employees. And let me give you an example. I had a client who had a business. He told me revenue's down 30%. He said, but I'm not laying any, revenue is down 30%. But he doesn't have to make any layoffs, right? Because he saved up some money and he had enough money to make payroll for 2 months without laying anyone off. Is he eligible for this? So to me, the answer was probably, because, and I told him I think that he is eligible because for him, he was in a business, he was in a service business. If he had 30% less revenue, he needed 30% fewer people on payroll. So his salary maybe would stay the same, but the people doing the work, he could get rid of 20% of them. And the way I understood it, and the way most people understood, that's exactly what the PPP, the Payroll Protection Program, is there for, to encourage people like my client not to lay those people off. His major expense is payroll, and by giving him payroll, which we're going to discuss the amount shortly, by giving him some money for payroll, and setting up terms where he's not allowed to lay people off, the government is getting him to not lay his people off, which means they now have jobs. And that's the story. It's not necessarily the way that they set it up. It wasn't necessarily a liquidity issue. It wasn't necessarily only if you didn't have cash. Didn't say anything about that. Now that some of these larger companies, publicly traded companies, are getting it, they're getting all, oh, do you really need the cash? It was never supposed to be about the cash. And I don't think that ultimately that's what it's going to end up being. A company that is having issues, which can be solved by having more money. It's not just about if you have access to it, because then they would say if you have access to a line of credit, you can't take out payroll protection program, right? Let's suppose you have access to a line of credit from your bank. That doesn't mean it's a smart business decision for you to borrow money to pay workers who aren't working. Again, my understanding, and what I believe is still the common understanding, is that the payroll protection plan was to keep people employed. And if you have a good reason for laying people off because of this crisis, and you keep them on instead, that's who this program was intended for. With that preamble, let's talk about the program a little bit. The idea is they're covering payroll for regular Joe. So they're looking at payroll up to $100,000 per person, plus state and local taxes, not Social Security, but state and local taxes. So the amount could be a little bit above $100,000. And that's annual payroll per person. Payroll above 100,000 is ignored, but again, we got 100,000 plus a little bit of money for the employer's share of health insurance, retirement plans, state and local taxes from the employer side, etc. You take the amount then, and you, as we mentioned, by the way, that it only includes people who live in the United States. You take that amount of money and you basically divide it by 12. Let's say that the amount worked out to $120,000. So $100,000 of payroll, $20,000 of other taxes, state and local taxes, and health insurance premiums from the company, retirement, etc. So it's $120,000. That's $100,000 a month. You're able to take 2.5 months of payroll. 2.5 months of payroll would be $25,000. So you're eligible for a $25,000 loan. Now, when you get the $25,000 loan, let's discuss the terms. The terms are, it's a 1% loan, no payments for 6 months. It's a 2-year loan where you don't have to pay anything back for 6 months, and then you'll owe 1% interest a year. But again, you don't have to pay it for the first 6 months. So the point is, you can borrow for 6 months, pay it back after 6 months, and you're good. You may have to pay 0.5% interest if you pay it back over 6 months. If you keep it longer, it definitely accrues. 2-year maturity, you pay it back. Now, the reason this is popular is because if you get this loan and you use it appropriately, you potentially do not have to pay it back, which means retroactively it turns into a grant. So the payroll protection plan, oh, by the way, there's no personal guarantee, no collateral. You don't have to be denied credit elsewhere. There's no loan fees. It is non-recourse. So it's a pretty good loan, 1%. And if you keep it for 2 years, you pay it back. If you qualify, you can get forgiveness. What does it mean to qualify? Qualify means use it on appropriate expenses over the 8 weeks after you receive it. What are appropriate expenses? Appropriate expenses are 8 weeks of payroll. So let's just say you have one employee and you're paying them $1,000. You're paying them $10,000 a month. 8 weeks of payroll is going to be a little bit under that. Let's say that's $19,000. You're paying them $19,000 is 8 weeks of payroll. The remaining money, up to 25%, can be used for certain other expenses. Those other expenses are rent, interest on a mortgage, on a business mortgage, interest on other debt incurred before February 15th, utilities. And group health insurance, you can pay all these things. Basically, the big addition from the calculation or calculation of what you get is that you can also spend the money on rent and utilities. All this stuff has to be spent over the 8 weeks. Again, 75% of the loan needs to be used on payroll. The rest can be used on non-payroll expenses. If you reduce your head count and do not restore it by June 30th, you'll lose forgiveness, meaning you're only eligible for forgiveness if you either keep your payroll steady or if for some reason you had to lay off people shortly after this whole crisis started, and the date that they gave was April 26th. So if you laid people off between, I guess, mid-February and April 26th, but you did restore them before the end of June, you would not lose money. You would not get dinged for reducing your payroll. Again, the idea is we want to keep people employed. So if you reduce people, you got to bring them back. Now, one question I got recently was, well, if I reduce people, then I didn't really pay the payroll. And the answer is yes, that's true. There are scenarios where you could have one of these issues and not the other. But, you could end up using up all your payroll money, but because you using all your payroll money and getting forgiveness for using it correctly, and be eligible for forgiveness because you used the payroll money correctly. But if you laid people off, you had too many people or people's salaries went up, whatever the case may be, it would not be forgivable anyway if you had laid people off and not brought them back. So if you lay people off, you potentially lose that. If you reduce salaries, you lose that. The point here is they want to keep people employed, keep people getting paid. If you do that, you should be eligible to receive forgiveness. That's the story with that. As I mentioned before, you need a good faith certification that you need the money due to the uncertainty of the current times. That doesn't mean because you couldn't make payroll, or it shouldn't mean that. The way I and others interpret it is that perhaps you wouldn't have made payroll because it wouldn't have been a smart idea, and that's why you're taking the money. And you have to say that the money will be used to pay workers, utilities, mortgage, etc., and mortgage interest, that is. And also that you have not double dipped to get money for this purpose from other things within the same bill, the COVID-19 bill. All right. Popular question, I'm self-employed. Can I apply? I have a partnership. Can I apply? The short answer is yes, you can apply. The money that you're earning, your owner's compensation, does count toward your payroll. So if you have like a one-person business, you're working for yourself, it's the numbers reported on your 1040 Schedule C in 2019. If you are an individual, not a corporation, you're applying as an individual, there are certain limitations on what you can count as expenses for using the PPP. They're going to look back at your 2019 taxes for that. For a real company, they won't necessarily do that. Meaning if your rent went up, if you're an individual, you may not be able to pay higher rent or higher rent in 2020 than you were paying in 2019. If you do, that may not be reimbursable. If you're a corporation and you have a legit rent expense, then that's cool. But for the individual, they're going to place a high emphasis on what happened in 2019 and just look to see that what you're asking for forgiveness for in 2020 is pretty similar to what was going on in 2019. You also have the opportunity potentially to refinance. In certain cases, you have to refinance the EIDL. If you took out an EIDL for payroll, you would refinance that into the PPP. And any advance, you wouldn't refinance because the advance doesn't have to be repaid. If you're a partnership, even though you claim self-employment income, you would still, the partnership would apply, and the income which is going on your K1s would then, or whatever, your owner for work, distributions that were going to working owners of the partnership to the partners, I guess operating partners, that would be counted as payroll for these purposes, and it would be you apply on the partnership level for any payroll if applicable to employees, and then also for the partners. Okay. Oh, and then for a step-by-step guide published by the Treasury on which lines to put into your application, please also email Isabella. Her number is in the chat, and we'll send you a copy of that. The Treasury put out something where they basically walk through a bunch of different kinds of businesses. If you're a partnership, if you're self-employed, if you're a sole proprietor, if you're a corporation. If you are an LLC, it goes by how you file your taxes. So if you're an LLC filing as a sole proprietor, you do like a sole proprietor. If you're LLC filing as a partnership, you follow the rules for a partnership. And it's basically a 5 or 6 step process telling you there's slight differences between the different types, but it tells you basically how to calculate your $100,000 maximum salary. And again, those are slight differences between the different categories, but basically it's $100,000, up to $100,000 of salary per person. You're borrowing based on prior salaries, capped at $100,000. So $200,000, you'd only be able to count $100,000, and then you would divide that by 12 to come up with a monthly, and you can borrow 2.5 months worth of salary. All right, a couple other things. One thing that we mentioned briefly before was deferring Social Security. Can you defer Social Security? Yes, you can. That means that you as a company pay Social Security tax for your employees. You do not have to pay that now. You can defer that. It means that you can take that money that you owe now and you can pay it later. When can you pay it later? The time when you would pay it later is December 31st, 2001, and half of it December 31st, 2002. Now, if you receive a PPP loan, Payroll Protection Program loan, and that loan is forgiven, at that point, you have to stop deferring Social Security tax. So let's say you applied for the PPP on, I don't know, April 15th, and you're approved on May 1st, and then you spend the money from May 1st to June 30th, and then you get forgiveness on July 15th. On July 15th, you got to stop deferring Social Security tax, and all that money that you owe, half of it you'll owe on December 31st, 2021, half of it you'll owe on December 31st, 2022. Another thing to think about, some businesses, especially businesses that have very low payroll, but not only businesses that have very low payroll, this could also apply to businesses that had wide fluctuations in the amount of payroll, and for some reason aren't good applicants for the PPP. The PPP isn't really going to help them. There are situations where you could get less than $5,000 per employee from the PPP. And if you're in one of those situations where you get less than $5,000 per employee, it might make sense to look at the employee retention credit. Employee retention credit, again, it's not compatible with the PPP. You can't do both. But the employee retention credit will give you 50% of qualified wages, a tax credit equivalent to 50% of qualified wages up to $10,000. So if you pay someone $10,000 of salary and those wages are qualified, we'll discuss what qualified means in a minute, you will get a $5,000 tax credit. It's not a tax deduction. Doesn't lower your earnings by $5,000. It's $5,000 tax credit. It is refundable. which means the government will write you a check for $5,000 if you don't owe them $5,000 in taxes. So you'll get that money. You won't get it right away, probably have to wait, but you're eligible to get that money. That's worth $5,000 per employee. But one, not compatible with the PPP. Two, you need to have it's qualified wages paid between March 12th and January 1st, 2021. And the real thing is you need to be suffering a significant loss. So if your revenue is down, let's say 50%, I believe I think it has to be at least 50%. So a very, very significant loss. But if you like, let's say you totally shut down, you qualify for this, and your revenues in this quarter are, nothing compared to last quarter, you'd be eligible for up to $5,000 per employee. So if you paid your employee $10,000, you can get $5,000 of that as a tax credit. And so that could be, if for whatever reason you don't want to deal with the PPP, you don't want to risk not having it forgiven, you're not sure if you're going to qualify, you might have to lay some people off anyway, and then you have the money and you paid it as payroll and now it's not forgivable, whatever, the whole story. You have the ability to get employee retention credit for employees that you keep and pay, you'll get this credit. Beyond that, New Jersey has some money that they're throwing at the whole situation. There's federal unemployment. If you do lay people off, your employees for the next few months at least could be made whole. So the federal government, normally unemployment is run by the states, but the federal government is basically giving the states extra money and saying, give this to people who file for unemployment. So if you've got someone who is working for you and you don't know if you're going to get the PPP or business is slow, you don't want it, whatever it is, if you do lay them off, and they're making around $55,000 in New York or around $65,000 in New Jersey, they'll actually do better on unemployment because there's this extra federal money being thrown in. So normally you only get a percentage of your salary from unemployment. I think it's around 60% or up to around 60%. But here the federal government is actually throwing in extra money. So some of your employees, lower paid employees, would actually come out ahead. So if you are trying to figure out who to lay off and who will be made whole and who will be okay, someone making around $55,000 would get the same thing with unemployment. And in New Jersey, it's even a little bit higher because New Jersey's unemployment, they pay more for unemployment. It's the same amount of federal money, but you get a little bit more from New Jersey. Beyond that, there was also, like I said, grants from the state of New Jersey. New York basically said they're going to be mimicking, if I understood it correctly, just saw this yesterday, mimicking the PPP program, putting more money into people who apply, like through certain banks or lenders. So if you wouldn't, same, from what I understand from the person who posted this, who works at the comptroller's office in the state of New York, it looks like it's the same criteria as the federal money, but there'll just be more. So not everyone's getting approved for federal loans, I guess, because there's not enough or there's too much of a backlog. So applying through some of these state things might help. All right, I'm going to take a look and see if there's any questions, and then we'll open it up to other questions. Okay, someone said that Akiva said he's very happy with Chase. Good. I'm happy with their systems. I'm not happy with their banking for small businesses. But everyone has different experiences. Someone asked, they're in real estate, they're looking to grow their business. Can they get loans during this pandemic? You can get loans from people who want to lend money for real estate. I wouldn't really be looking to get federal loans that are for the disaster. Like that, people may not look kindly on that. I don't think you would qualify. If you have payroll, you may, depending on the details of your business, you may or may not be eligible. I mean, you're not categorically excluded because you're in real estate. And if you're eligible for a payroll loan, you're eligible for other loans. If you have been hit, you might be eligible. But I wouldn't try using these disaster funds to go grow your real estate empire. I'm not sure that's a good idea. Jack Shama, yes, I was friendly, and then they basically cut bankers out of the bank I used to go to. So a year and a half of my friendly relationship, which may or may not have helped, was basically cut out. Isn't the EIDL out of money? All the loans were out of money. They're supposed to be refunded as of yesterday. EIDL is based on What is it based on, not be advanced? Economic injury disaster loan is based if your business has suffered a loss. It should be for the advance also, but basically if your business has suffered a loss, you're eligible to, you may be approved for an economic injury disaster loan. The interest rates on these loans, it's 1% on the PPP, 3.75, or I think it's up to 3.75 on the EIDL. As far as I know, appropriations were reapproved on Friday, like Jay is saying. Maybe it'll take them a couple more days to get back up. I mean, they seem to be focused on the PPP, but there was more money appropriated for that, so I believe that it'll go back. That they'll eventually EIDL will be back up. Do I have a way to apply? I don't, not sure if that's for the EIDL. No, it needs to be through the website, from what I understand. Also, you can speak with a small business development center, SDBC. That's, loosely speaking, it's a division of the SBA, and I can make an intro to the one in Long Island that I've been in touch with. Can one apply for unemployment and also PPP? Okay, PPP is something that a business applies for. Unemployment is something that an individual applies for. If your business lays people off, those people can apply for unemployment. If you are your business and you lay yourself off, can you apply for PPP and unemployment? You can probably apply for unemployment. Basically, any business can have people on unemployment as long as there's no PPP, because how are you supposed to pay them, right? If your business is shut down, you have no money to pay, then you have no money to pay. So they'll be on unemployment. And then when you get the PPP, you got to rehire them back. Can you do that with yourself? I guess if your business has no income and you lay yourself off, then fine. You just need to make sure that you qualify for unemployment while you're waiting for the PPP, which, if your business is really shut down, then I think that you would qualify for that. If we're talking about your own business, you may not get that much out of unemployment, because if you're self-employed, you're not really eligible for state unemployment. It's mostly federal. The federal $600 you should get as a self-employed person. The rest of the state money, probably not. Does PPP apply if I have W-9 consultants that work for me 40 hours, weekly 40 hours? If your consultant, W-9, if you've got 1099s, it does not work. If you have W-2s, it does work. Meaning it needs to be employees. Consultants basically can apply for the PPP on their own. And if they can apply on their own, so you cannot apply for them. Give me 1 second. So if it's people who you pay, I believe that's what W-9 is. People that you pay on a 1099, then you cannot apply for a PPP, but they can apply on their own. What's the best option for a small business where the owner is the only person on payroll, but most of the income is from self-employment reported on a K-1? We discussed this. Send out. You can apply for the PPP. Your self-employment on your K-1 should establish your payroll. Whatever showed up in 2019 is the number that you'd use to come up with your annual payroll. What's the best option for a small business where the owner is the only same. Okay. Can a new employee be added to what you need for forgiveness? I've not seen specific guidance on that, but I assume that the answer is yes. Because people leave for all sorts of reasons. The point is you're keeping people employed. I could hear it the other way. I could see it both ways. I imagine the answer is that if an employee left, or if you had an employee leave, that shouldn't hurt. If you have legitimate payroll, the fact that it happens not to be the same person as last year, I don't think that should necessarily be a problem. And the truth is, I mean, they're looking, the dates that they're looking at, yeah, it's not, yeah, it should be fine. The dates that they're looking at, you could establish your amount of money for your PPP based on 2019, and they're looking to, I think, February 15th of 2020 for establishing the number of people. So, you know, you could have different numbers. You have different employees. Things change. I think, I believe that that would be fine. But I have not seen specific guidance on it. Isaac Klugman, hi. Okay, we had a question if the government is giving out stimulus programs, the government's giving out money to start a new business. I mean, if those things exist normally, great. Take a look. I'm not familiar with anything that has to do with this situation. Okay, if you're a new business without 2019 records, so basically they look to the beginning of 2020. That's the basic answer. Certain types of businesses, I believe if you're a self-employed business that began in 2020, they're still going to issue guidance on that. But so far in general, what they've said is that you look to the beginning of 2020. The problem with being self-employed is you don't have payroll records, and there's all sorts of stuff, all sorts of information you don't have till you file your taxes. So how exactly do you establish anything for 2020?
Yeah, okay. Frank.
For self-employed people, they're really heavily looking at 2019, and
You did
that's
the garage?
1 minute.
Oh, okay. Oh, Rick. Okay. Yeah, sorry.
I need a minute. Wash your hands and I need
Robert, can we mute everybody? I think that we have some someone speaking here. Thank you, whoever. Okay. All right. We have a staffing agency that payroll went down due to the loss of business based on February payroll data. How can we still get the money forgiven under the PPP? If you have a staffing agency, and I don't know if I have all the details here, but if you have a staffing agency and you used to employ people, and now you didn't employ people, then you're not gonna, and you have the PPP and you did not rehire the people, then you will not be eligible for forgiveness on that part of the PPP, at least on that part of the PPP. So hire your people back. I mean, that's what they're recommending. Otherwise, you could basically get cut. You'll have a portion of your PPP money cut out, presumably pro rata. Can I apply for the PPP if I only file 2018 taxes? The short answer is yes, but you gotta have your 2019 numbers in order. And the number, if you want the detailed step-by-step, so email Isabella, we'll send that to you. For a lot of the categories, they say if you don't have the 2019 data, use the number that would go into your 2019 thing. So you're not filing based on 2018, but where you need, and it's mostly for self-employed people where you need the 2019 taxes. If you need the 2019 taxes, and you don't have them, generally they say that you can use the number which would go into your 2019 taxes when you file it shortly. Okay, SSI, does it have to be my own payee or not? I don't know. Does rent for PPP forgiveness also include CAM and taxes? I don't remember seeing taxes included. I kind of doubt it. They said rent. They said rent and utilities. I assume that's what they meant. Okay, would one apply for a state loan in the state they work or the state they live? We're lending it to a business. I kind of think it would be where the business is based, but I don't have any special insight into that. If the PPP money is forgiven, will it be considered income? I believe that what I've seen is that it will not. I've also seen accountants getting all over that and trying to figure out what that means and if it will be true and how it will be true. So I guess stay tuned. But believe that I saw that it will, I believe I saw it will not, and I believe I saw accountants challenging how that was practical. Meaning they had questions, either they had questions about how it was possible to not, or maybe I'm remembering wrong and there was no guidance and they were saying it has to be. I'm pretty sure that I saw that they specifically said it will not be included in taxable as income. That's what I believe I saw. The question was, if the money, the revenue, the money coming in is a loan that's not considered income. Question is, do they now count the payroll as an expense or not? That was the big accounting question. And that I haven't seen guidance on that. So the answer is they have said it will not be considered income, but what that means and how it interacts with payroll, still up for, I guess, interpretation. Okay, I've got a question from someone at 4:45. A thank you from someone, and a question from someone else. You know who you are. Follow up with me. I'm not sure what you mean. But it was a private question, so I won't call it out. Something about a CPA. Next question. Someone wants to know if I can still apply. I think this is, yes, you can still apply for the PPP. They renewed the funding starting yesterday. That's that. So there is now there is a backlog. There was a big backlog. How much of it will get through? I personally suspect there will be around 3, or maybe like Bank of America CEO, I think, is calling for just like an open rolling application process. Just let us do this as much as it's needed. Why should we arbitrarily just like cut it short and whoever got in line first, like you need it. It was approved for people who need it. So why are we cutting it short every few days? We'll see what ends up happening, but yeah, it's you can still apply, and the sooner you get it in, the better. Which banks would I recommend applying for the PPP? I'll tell you, if you have a simple, straightforward situation, I would go to an online lender. Cabbage, Cross River Bank, a couple of these guys. Things are pretty straightforward.
What about Square?
Yeah, and I haven't heard anything specific about Square, but yeah, I have heard that people don't like Cabbage. But
Just a question: do you need to have employees? Do you need to have good credit in order to get this loan?
No, you do not need to have good credit in order to get this loan. This is because the assumption is that it's going to be forgiven. They don't really care about your credit. The SBA is backing the loan 100%, so the bank is not taking on any risk. The online platform seems to be smoother. If you have something complicated where you need to rely on the discretion of a banker, I don't feel like you're going to get that with an online platform. But yeah, so that's that. For in-person banks, if you've got, I spoke with the guy at Dime Bank, who I think was pretty good. I've got a whole list if you want. I mean, I've got lists from other people. I've got a list I compile myself, but these things change rapidly. Today I spoke with a banker at BNB who told me that they're taking loans from outside businesses. Again, keep in mind, this only works for people who live in the United States. PPP does not, they're not looking to help people out of this country with payroll. The workers, the employees need to be based in the United States. Okay, timing of eligible expenses during 8 weeks. Is it when incurred or paid, for example, paying insurance for a month ago? This was not made super clear. I've seen people talking about this. I don't have a good answer. That's my answer is I don't have a good answer. 1099, I'm not sure what that's referring to. Can an independent consultant get a grant or other form of financial assistance other than SBA? If yes, what proof of the current hardship has to be provided for the application? For the application, it does not. You can apply for the EIDL, Economic Injury Disaster Loan. I believe that you can apply for that as an independent consultant. You can apply for the PPP, the Payroll Protection Plan, through a bank, preferably your bank. by the way, for all the questions about which bank, the best bank is your bank. If your bank is a big bank who you think isn't going to work with you and is going to stick you on the back of the line, like happened with a lot of big banks, then that's the time when you'd consider going somewhere else. Or like myself, I want to be dealing with a person and Chase is not providing people. So I'm looking for something else. You do not need to prove hardship as part of the process for the PPP. If you ever get audited, they may, from the way I would say it, the way I understand it, and the way I believe other people understand it is you have to have a reason why you needed it. It doesn't necessarily, like you might be nervous that revenue is going to stop in a month. And today's when they're offering the PPP. So you're getting it now so you can pay your expenses in a month or in 3 months because you're going to use the PPP for this month and next month. And then in 3 months, you'll still have the money. You'll still have your own money, which you didn't spend on payroll this month. You don't necessarily, you should not have to prove hardship. What will actually happen when it comes to forgiveness, I can't say for sure. They are looking to go after people who had money, but presumably that's the big public companies. That's what it seems like. In terms of proof of hardship for the application, not that much. You don't have to prove that much for the application of the EIDL, going back to that. But if you do get the EIDL, once you put in your application, they're going to come back and ask for more detail. You're going to presumably have to show a drop in sales. Okay, I applied for the $10,000 grant, forgivable loan, economic injury disaster loan. We received only $2,000. How is this working? Generally, it's based, it looks like, you take a look at the fine print, it was up to $10,000, and the way that they seem to have given it out is $1,000 per employee. Thanks for sharing your expertise. You're welcome. Thank you for joining and for all of your questions. Okay, next. We started a single employee business in January of this year. How do we establish a record for our needs for 2020? No income for 2019. A single employee business, you're not telling me what the business structure is. If the structure is like a sole proprietorship or something like that, and there's no payroll records, then you have a problem, and they will be coming out with guidance on that. As far as I know, as yesterday I asked around, I haven't seen it, but I checked around with other people who also had not seen that guidance. If you are running payroll in your business, then you have payroll records. That's how you establish. If my business is making more than usual because the insurance payments take months to go through and the pandemic will hit me in 4 or 5 months, will make a big difference as I apply. I don't think that that will hurt you for the PPP as long as you have a solid case for when they come to you later. Meaning you can apply for the PPP, and then if someone comes to you and says, how are you applying for the PPP? You haven't had a drop in revenue. Your answer is, well, my drop in revenue is coming in 4 or 5 months. Really, it is a drop in revenue, just not, it takes 4 or 5 months for payments to come through, and I'm going to be hit severely. And to me, that seems legitimate and reasonable. For the EIDL, from what I understand, you have to show it to even get the money at all. For the PPP, you have to explain why you needed the money. Perhaps to get it forgiven, maybe even to get the loan, though I don't think so. You have to explain why it's needed, why you needed the money. Okay, if an employee does not claim...
Excuse me, from what I understand, you don't need employees for the PPP. That's what my accountant had just told me.
I
Is
don't
that something
know.
new? Just as long as you're an independent contractor, you run your own business.
Correct.
You don't need to have payroll.
Correct. That is correct. You need the way it is so a little bit legalistic. Your payroll is established by the amount of money that you're getting. They call it's the same basic structure, but you don't have to show payroll records. It's your money that showed up on your 2019 tax returns, etc., business and personal or whatever. The money that you took out of the business that was left after paying expenses is basically what you're earning.
What you're earning, which is the net. So are they basing the $10,000 that they'll give you on your net?
10,000? No.
What
10,000?
The PPP loan is 10,000.
No, it's not. The PPP loan is up to 10 million. The 10,000 is the maximum advance under the EIDL. The PPP is 2.5 months of payroll. It's 2.5 months of payroll based on a maximum annual payroll of $100,000. 2.5 months of payroll and some other related expenses. like insurance premiums paid by the company, etc. State taxes. Okay. But yes, your salary, if you run your own business and your salary is what you get from the business, that is, if that showed up on your 2019 taxes, then yes, that is included. Okay. If an employee did not claim their unemployment right away, wait, I just lost this. Did not claim their unemployment right away, did not realize that they had to claim each week. Will they still get it when they are approved? I believe that unemployment goes retroactively. That is not my area of expertise. Great content. You're so knowledgeable. Thank you. If you're still listening, I hope all is well. You're a good guy. This is somebody who I know. Okay. Next question. Just checked the site and saw this. Yeah, disaster loan applications. Find out how to apply for SBA disaster loan. What's the question? Okay. I don't know exactly when the EIDL is going back up. It should be going back up. I believe that they appropriated money. But you can Google that. I mean, this was all over the news for the last 2 weeks. I'm pretty sure that there is money in that bill for the EIDL. It should go back up. If not, contact the SBDC. If you want to contact at the SBDC, email Isabella. We'll get that for you. What is the $10,000 advanced loan? Is that part of the PPP or EIDL? The $10,000 is an advance on the EIDL. So you put in your EIDL application. It takes about 10 minutes, except it seems like it's down. In terms of the question, is there a way to find an application elsewhere? Application needs to be done online. If it's not online, it's not online. At one point, they had like an application you could fill out. Now, really, you have to just fill it out on their website. And if it's not up, I don't know what to say. Maybe try Googling it. It's not. I'll tell you, I've been speaking to bankers. The PPP is taking up a lot of their capacity right now. The site keeps crashing. The bankers are trying to submit new PPP loans, and the SBA site that needs to approve the PPP loans is crashing. So the SBA is probably focused on the PPP. I would guess that the EIDL will be back up shortly. It should be up. It should have been in the bill.
זה באמת הבת שלהם? כן. כמו שלך, מגלת בזוגו. אבל למה האוזניים שלה נראים ככה?
Whoever that is, if you can mute, please. Okay. What is so the $10,000 advance is an advance on the EIDL. The process, once it goes back up, and I'm sorry that it's not up, but that just is what it is. Right now, it seems that it's not up. Once it goes back up, you put in some information. There's not a lot of information. I did it probably a month and a half ago. And they ask you, do you want to apply for an advance on your loan? The advance will be forgivable. And basically, whether you get approved for a loan, take a loan or not, you get that advance and you can keep it. The advance is up to $10,000 of the EIDL, and it is, in practice, what it ended up being was $1,000 per person up to $10,000, $1,000 per employee up to $10,000. All right, I think that we have now gone through